and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. Well, the recent budget is still fresh in everybody's minds. So this week we're going to take a hard look at an aspect of the budget that tests frankly everyone's belief more than others, the disinvestment target. If government budgets, and in fairness one must say that this is true of all governments, not just this one, are really about making tall claims, it is a claim on disinvestment that prima facie seems the tallest. Consider, in the next fiscal year, government expects to raise as much as 72,500 crores from disinvestment. That's more than the fiscal deficit for the year and 60% more than what government has managed to raise in the last year. This despite the fact that for 7 consecutive years, no government has managed to reach its disinvestment target. So is the government being overly optimistic, simply naive, or have things changed so dramatically that we should set aside our doubts and admit that the target is not quite so unreasonable? We'll have a better perspective by the end of this half, I am sure, because joining me in today's macros discussion are two of the best brains of the subject. Sumit Bose, former Secretary, Finance, Government of India, who in an earlier avatar as Secretary Disinvestment knows all the ins and outs of the disinvestment process, and Dr. Subramaniam, MD, Institutional Equity, Axis Capital, who brings a market perspective. Welcome to the show, Dr. Subramaniam, Mr. Bose. Let me start with the target, 72,500 crore. Given that, as I've said, we've consistently fallen short of the target and for second consecutive years, can we hope that 8th time round we'll be luckier? In fact, ideally we should see this number actually as comprising of 3 subcomponents: 46,500 crore by way of disinvestment of the minority stake, 11,000 crores through listing of insurance companies, and 15,000 crores through strategic sales. So my first question to you, Mr. Bose, is the target overall too ambitious? And which of these components do you feel is likely to be most problematic? Is it going to be strategic sales? Is it going to be listing? Let me start with you, Mr. Bose. As I said, you know how the wheels of government work. And if I may add, very slowly, that's how they normally work. So will things be different this year, Mr. Bose?
Well, no, it's a stiff target. If you look at the target this year, it's 0.3% of the GDP. It goes up to 0.4% of GDP next year. One way of looking at it is it's a stiff target. It's never been achieved in the past. We've been falling short of the target. So we set it aside as something not credible. But let's look at what the FM said in his budget. The components which then lead to this 72,500 figure. He said, first of all, that he would list companies. The government would go ahead and list PSUs. Now, listing has not been done now for about 5 years. If I recall, the last PSU to get listed was the NBCC, if I'm correct, and that is in 2012. Now, that's what he said, and he's talked about launching the second ETF, CPSC ETF. Then he mentioned 3 public sector PSUs. Of course, that's not an railway PSUs to be listed. And he talked about continuing with the disinvestment policy of last year, which includes strategic sales and the insurance companies, which is also reflected in the other budget document, which gives the status of actions taken on last year's announcements. So these are the 5 different components which make up this total of 72,500. I think listing itself is a big thing, and it should be done irrespective of the target or not, because it does improve the performance of companies. We've seen it in the past. We've seen how companies have become more open. We've seen that with the companies, say, like Coal India. It happens. In the Expenditure Management Commission, we had done some numbers.
No, if I could just ask you, yes, we'll come to the issues of, the detail. We'll discuss listing at greater length, but very broadly, just the targets. Okay.
So broadly, I am a little more hopeful about the targets. Yes. See, you should see the target not in the context of these 5 announcements. And I think if you look at it, and if you look at some of the preparatory work which has been done by the government, the target does not appear that it cannot be achieved. Yes, if you look at the government has been more modest, for example, in its revenue projections. The buoyancy of revenues about 1. Gross taxes have to go up by 12.2%. GDP goes up by 11.75%, you have a buoyancy of 1. If you see it in that context, yes, the disinvestment targets are more ambitious, but that's bound to be. If you're becoming sort of less reliant on your revenues, the tax revenues, you'll have to pitch in somewhere. So I look at it that, and I'm a little more hopeful than perhaps what is being stated elsewhere.
Okay, so you are being a little bit more hopeful than what the general commentary is. But Dr. Subramanian, do you agree with Mr. Bose? How do you view the target overall and the sub-targets, particularly from the market perspective? Which is the most likely to be achieved?
I think the sub-targets, if we really look at it, as you said and Mr. Bose said, that the secondary sales of 46,000 crores and the new listings of 11,500 crores and 15,000 crores of the strategic sales. Let's look at the secondary one. We just saw in the last week of January, we did the CPSC ETF against a target of 6,000 crores. The total demand was significantly higher. Just the institutional book, which was 50%, itself was more than twice subscribed, and the non-institutional, non-anchor book, if you really look at it, was subscribed even to a greater extent. That tells that the market has got significant appetite for good quality paper. We are talking about, is this number achievable, 46,500 crores? Now let's not forget that there are interesting companies like the oil companies are there, and these have significant government ownership. Whether they're part of the CPSC ETF, whether they can be a new ETFs, these can definitely be there. 42,000 crores is, you're talking about a total number of somewhere in the region of about $6.5 billion. $6.5 billion in the overall context of the other fundraising. Let's not forget, in the past, in the year FY 2010, FY 2011, we had primary issuances and government offerings put together reach about $20 billion. So $6.5 billion from the government is still not going to crowd out private sector, because the private sector doesn't have a 15 or a $18 billion outlay in terms of a new paper issuances.
Okay, so you also agree that the number, you agree with Mr. Bose, the number is not impossible. But Mr. Bose, earlier we were talking about listing, and I wanted to ask you, how easy is it in practice to actually list public sector enterprises? The budget in fact talks of listing of some of the rail companies, and earlier, as you mentioned, the cabinet had given its nod to listing the public sector general insurance companies. But in practice, there's a huge amount of preparatory work that needs to be done before these companies can be listed. And in the case of the rail companies, there might even be the issue of the kind of accounting principles being used, the costing of their capital, etc., since the initial capital has been contributed from general government coffers. So will we be able to complete this rather lengthy process in a year, Mr. Bose?
Certainly, because it's not that all the work is being done by a single agency. It's different companies which have to do this work. So you see, the significance of listing of railway PSUs should not be lost. You see, it's part of the process which this government has undertaken of merging the budget, of making the railways a little more open. In the past, you'd have seen that when there has been some pressure on the railways to list, they have in fact clamped up. And what they did in 2011 was, in response to pressures to list and to disinvest, they went ahead and in fact voluntarily delisted IRCON. So I think there's great significance in this announcement of listing of railway PSUs. That's as far as the railways go. The other PSUs, you see, as I was mentioning, in the Expenditure Management Commission, we did some numbers. And we found out more than about 100 profitable PSUs. And through estimate, I mean, we had to rely on broad estimation, the market cap will fall 4 lakh crores. Now, you do a IPO discount of 20%, you still come to a number of about 70,000 crores, which you can get from listing of companies. I mean, that's the revenue part I'm talking about. And the other benefits of listing we all know about, and it's been talked about also in the FM's budget speech, he's mentioned that. So I think there are tremendous benefits. Then there's another layer of benefit. The states. At one point of time, we were hopeful, maybe in 2010-11, that some of the state PSUs would also list. You'd recall we had done manganese ore or moil, in which Madhya Pradesh government and Maharashtra government were partners with the central government in listing. But after that, nothing has happened in the states. And I see that if the central government takes forward this process of listing of profitable PSUs, there would be some ripple effects in the states. So that's another good thing to happen.
Dr. Subramanian, Mr. Bose is very confident that government can manage the entire process of bringing these companies for listing. But even assuming that the government will be able to do work in double quick time, my question is that will the market have so much appetite? I know you spoke about the appetite for paper, but after all, the economic environment in which we are working today is not exactly robust, and foreign investors might be quite wary of buying into companies where the heavy hand of government can be expected to continue, whether it's insurance or whether it's railways. I don't see government giving into that arm's length distance, which is necessary to allow these companies to function on purely commercial lines. So will there be demand for so much paper from the market?
Okay, let me answer the question, the earlier question first, in terms of can the government actually go ahead and do the legwork easily. Actually, as bankers, we find that our ability to list government companies to be comparatively and significantly easier, because the paperwork of many of the government companies are in far superior shape than many of the new entrepreneurial-led companies, because they follow set rules and procedures. So preparatory work from a government company point of view is the least of the problems. So now let's go and ask ourselves the second question which you have posed. Does the market have appetite for a large set of government companies, where you are posing the question that will markets take into consideration companies that are, within quotes, has a government heavy hand? I would be very happy to say that, take the case of NBCC, which Mr. Sumit Bose mentioned. Look at the price at which it got listed in 2012. In 5 years, I would be very happy if many private companies gave the kind of a return that NBCC has given. So there are many companies, exceedingly good quality companies from the government sector, where they are functioning pretty independently, and more important than that, there is value in many of these companies, and investors have no issues in terms of looking at these companies and participating. That's one. The second part, the third part of the question which you asked was that, will foreigners come in? I want to just take you to the market as such. Let's not forget that the Indian markets are themselves very, very large.
Okay.
I saw a report recently that the total mutual fund market is 17 lakh crores. The equity part of it has grown tremendously in the last couple of years, and in January alone we saw 15,000 crores of new money into the mutual funds,
Sure.
equity mutual funds. If you look at all of this, so let's not forget that the domestic market is extremely large and extremely buoyant. Not just that, in the most recent issue which you brought in January, the BSC issue, which we closed before the budget, saw a tremendous level of subscription, both domestic and foreign. It's not just only domestic came in. So is there an appetite? I think as long as the valuations and the pricing is decent, I think you will definitely see appetite. And government companies, in terms of the quality of management, is pretty very, very good in most cases.
Okay, well, as a taxpayer and as a citizen of this country, I'm very happy to hear that both of you think that disinvestment is doable on this scale, and that government companies, in fact, very often are better than private sector companies. But I'm afraid on that note, it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the government's disinvestment target in the current year's budget with two experts, Mr. Sumit Bose, who was formerly Disinvestment Secretary, and also Dr. Subramaniam of Axis Bank. Mr. Bose, let me just turn to the issue now of strategic sales. What is really holding back the strategic sales? A couple of months ago, the Niti Aayog had given a long list of companies which they felt were ideally suited for strategic sales. But for some reason, the government doesn't seem to be making much headway. So what's holding back disinvestment, strategic disinvestment?
Yes, you see, you had asked a question at some point of time earlier that what of these subcategories is more difficult. I think strategic sales is the most difficult of all the categories we are dealing with. Following from the Niti Aayog's list, I've been looking at advertisements, or you look at the website of DIPAM, you'll find that there's a lot of work which is happening independently. They have appointed advisors, various companies and the names are there. They have appointed advisors, legal advisors, other advisors, and they are doing the legwork. So I presume a lot is happening there. Now, whether I cannot say at what stage they are, but that's sort of more difficult work. And there is some amount of political legwork which also has to be done. You know, someone has to talk to the unions sometimes, or sometimes to the state governments. There are land issues. What happens to that? So it does require a little more effort than I should say listing of companies.
I think, yes, I would agree with you there, Mr. Bose, because in fact, yes.
But since the process is on, that's really the heartening part.
Yes, the process is on. In fact, the FM in an interview to this channel had just said that, disinvestment is essentially the art of the possible. And there also he's talked about political opposition, which is something that I thought should have died down by now. But Dr. Subramaniam, if I can ask you a related question on strategic disinvestment. Normally, corporates should be more interested in strategic disinvestment. But do you think after what happened with Balco and Hindustan Zinc, will that be a factor that dissuades corporates from kind of biting the bullet, as it were, on strategic disinvestment?
The experience of Balco, what it tells us essentially is that the government has gone back not in terms of the intent, but the time period is what is there. But if a clear-cut disinvestment policy comes through and we know exactly what's going to happen, I think there is going to be interest, because many of the assets which have been and the companies which have been identified by Niti Aayog are very attractive assets for the market and the private sector to come in and look at them from a strategic point of view. The process, like Mr. Bose says, is not extremely easy, but having said that, is that going to be from investors' point of view or the corporate's point of view, they're going to be worried? Of course, every acquisition, whether it's from a sale by the government or by any other corporate, is a challenging process. They understand the risks and they are willing to look at the risks still.
Okay, so once again, good news for the government. But Mr. Bose, in the past year, we've seen government opt for buybacks as a means of disinvestment. Likewise, many of the shares that are being divested by government have been picked up by public sector entities like LIC. But are we kidding ourselves when we call this disinvestment? After all, it's not very different from the earlier route where we bundled PSU shares and had some other PSU buy it. So does it really serve the purpose of disinvestment? Because also means not just raising money, we also want to change the management in public sector undertakings. So does that objective get served at all, Mr. Bose, in this process?
There I agree with you. You see, there are limitations to buyback. As if you see buyback in the context of disinvestment being also a reform process, a broader reform of our CPSCs. Buyback has its utility from time to time, and it's not that it's limited only to public sector companies. Privately owned companies also do that, go in for buybacks. But of course, government has had to resort to buybacks also because of the urgency of meeting targets. I mean, let's not, and the fact that a lot some of these companies had a lot of funds with them which they were not using for capex for whatever reasons. I mean, what was holding that back, I'm not going into that. But yes, I do agree with you that as we move forward, and if we have to reform the entire PSU, all the PSUs and take forward reforms there, we cannot rely entirely on buybacks, and certainly not on on bundle sales as in the past. As for LIC, I mean that LIC is a big player in our equity markets, both for private sector and for public sector. One is never happy if LIC picks up the entire stocks on offer from a PSU. We would like it, I mean, I would personally like it might be much more widely held and retail coming in a significant manner, because I think that is needed. So there I agree with you that perhaps more needs to be done for retail and for mutual funds there.
Dr. Subramanian, would you agree with Mr. Bose when he said actually, in fact, perhaps the manner of disinvestment leaves something to be desired? And here, in fact, I'd draw your attention also to this CPSC ETF that you spoke about. And so you said it received a very good response. Fair enough, yes, the government did raise more money. It was very well, in fact, it was oversubscribed. But this again, does it serve the purpose of the objective really of disinvestment? It should not only be to raise money, but it should also be to change the culture and bring best practices of the private sector into the public sector. I know you said that not all the practices in the private sector are necessarily best practices, but the general feeling is that the private sector is more nimble, it's less lethargic. So does a CPSC ETF serve that purpose, Dr. Subramanian?
I think if you really look at it, my answer would be twofold. One essentially is that management practices of many of the public sector companies, they are very, very strong board. What people tend to worry about is that the undue overbearing, within quotes undue and within quotes overbearing policy directives by government on PSU companies, so that they don't get into commercially viable activities. But having said that, if you remove that part of it, if given the independence, we have seen many large public sector companies have the management and the capability to run it. I mean, today I would say an NTPC today would be a far better public utility than any other private sector company in terms of utilities. Their ability to run those large corporations is immensely commendable. So, and if you take similarly a BHEL, in terms of their ability to take commercial decisions, I wouldn't fault BHEL from any other private sector company. I don't know the difference in terms of actual running these corporations. Therefore, what you need to do essentially is to make sure that these are run commercially and not with a government oversight. But that's more of a procedural issue at the top and not the management capability there. That's my point. But in terms of the availability of capital across from retail and mutual funds and FIIs, as the CPSC ETF said, and even a couple of years back when the PGC came out on its own, Power Grid Corporation had significant amount of a participation from foreign, domestic, both institutional and retail there. That's possible. Coming to the case of LIC, it's very simple. LIC, on one side, we all think that the government is dumping stock on LIC. But on the other hand, LIC is telling us that, I look at it as an opportunity. Where will I get a chance to buy $1 billion of ITC from the market without moving prices? That's impossible. And as the largest investor in the country, he's saying that the government is actually helping me out rather than dumping me.
That is true. It's all a question of how you look at it. It's a question of perspective. But Mr. Bose, since SUTI is so big on the government's agenda, was there any discussion about divestment in SUTI during the time when you were in charge of divestment? Because that would be a very easy way of raising money. Because yes, it is true, as Dr. Subramanian said, that you cannot disinvest in a large way, you cannot dump paper. But surely SUTI should be the easiest thing to do for the government. So what is holding the government back? Was it ever discussed when you were in office?
No, those days actually SUTI was part of Department of Economic Affairs and not part of disinvestment, as you would recall. That has happened with this government and recently, and I think you should give the government credit. After all, ITC has not been, they've sold the SUTI ITC shares. It's been after many, many years of holding it. So I think the Department of DIPAM, they deserve full credit for being able to sell the ITC shares, because and before that they sold the L&T shares. I think there's excellent work being done by the department to do this. There's more there in SUTI, and I think in future they should be able to work that too.
Okay, well that's good to hear, and I'm afraid I'm completely run out of time right now, so I'll have to end this discussion here. The good news really is that despite all the challenges that we have in divestment, both my experts are fairly unanimous in agreeing that it is doable, and that as a taxpayer and as a citizen of this country, as I said, is certainly good news for us. Thank you so much, Mr. Bose and Dr. Subramanian, for joining me in the discussion and shedding light on all the possible challenges in achieving the target, and why despite these challenges, there is a chance, and a pretty good chance, that we just might pull it off. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now. In the meanwhile, in this case, there's any other topic that you'd like us to take up for discussion, please do write in to us at macroswithmythili@timesgroup.com.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.